right? According to the.
Yep, 5 minutes.
Okay, 5 minutes. Sorry. Yeah, I guess it's the same way, right? The world revolves. The market like you very much.
People have a passion for betting against America's ability to like hold an election. That was maybe the weirdest part to me. We're it turns out we got a perfect record in actually deciding a president, and we've had some close calls, but we usually figure it out. So just having the results in, kind of even in the middle of the night, it's like that's a huge W. That's a huge upside surprise. This is not going to.
And then of course the fact that it was not a margin of error type of victory. There should be no pushback and controversy about it, right?
Yeah. It's America. It worked. Half the people are pissed. That's exactly how it's supposed to be.
Exactly what Thomas Jefferson wanted.
That's the way they drew it up.
Intrigues me more. The Republican Congress, as I sent out a little while ago, our good friend J.C. Peret's chart, the Republican Congress is really linked to above average stock market returns. And I found that fascinating. I guess I've always discounted, the president is this omnipresent, all-knowing, all-powerful being wizard behind the curtain. I don't buy that. But, now that you've got, we talked before about executive orders and things like that. You don't need executive orders now to do a lot of things. So we'll see what happens.
Yeah. Somebody on this panel commented a week or two ago, because I know I got it from this panel, that they knew somebody in the know in the Trump entourage that said ASAP, once elected, he was going to have executive orders in the hundreds. I got that from one of you guys.
Well, not me.
It wasn't you four. Okay, well, process of elimination.
He's not president yet.
Yeah. And Ben's joining us today. He just couldn't stay away. Did you guys see the show yesterday? Got a little heated.
Excellent.
Yeah, I told Macke to watch it. It got a little. It was pretty entertaining.
Yeah, it was pretty wild.
I was telling Jen, we need entry music. We need oh my God! Paul Meeks storming in there, do the walk,
and then we do a live feed from the MMA cage. We get those guys in the cage.
Well, yeah, we might not need them in tights hitting each other.
Yeah, I wouldn't want either one of those dudes to get a heart attack.
They fought clean, though, man. That's a good argument. It's half the shows in finance have at least a quarter of their content is built around preparing fake bull bear fights. There's little graphics, and you got a bear fighting a bull, and people pretend to argue about a stock that if you drew a Venn diagram, they agree with 90%. Oh, we're going to argue about Apple. Who the hell's going to come on and argue that Apple's, it's a piece of shit company, it's probably going out of business, I'm going to short the crap out of it, right? There is no bull bear to me. So have those guys kind of organically give each other crap, that's great.
Sometimes when these CNBC producers call you up, they say bull or bear, right? Because they want to pair you with the other side to get a little, excited. All right, guys, we're coming down to within a minute. Again, I'm going to lead with Robert, and then I think I'll probably go Bakes, Macke, Brey. Does that sound good?
Rock on.
Okay, brothers.
Who's raking today is that freaking Polymarket French guy.
I was just going to say that. I was just texting that to a guy. It's like the French whale's having himself a day today, isn't he?
Such a huge day. Such a huge, I'm semi-anonymous and just swimming in FU personal cash. It's like, other guys have bigger net worths, but I just made $60 million betting on freaking foreign elections. Sacre bleu. I hope he's ordering something very expensive in French in a very, very condescending accent.
I hope he goes and buys a vineyard.
Totally.
Take his. Say, hey, do you accept Bitcoin?
The answer will be no.
All right.
Do we have any news? Look on Dave and Buster's, Ben. It's effing glorious. I mean, it's
No, it's
All
what
right.
I said. It's what I said in the group chat. I was like, that's what you want to own. It's like Six Flags, BJ's Cake, domestic services that are kind of cheapish and kind of been left behind. Some of the pod shop money will flow in there. It's what you want to own. I mean,
All right,
all
guys.
the furniture guys are getting torched this morning. Was there any news there, or is that just on import stuff?
I
All
think
right.
it's just import. I think people are just running the
Good
book.
morning, guys. I'm going to start the show. We got a lot. I want to keep you some powder dry for your individual segments. But here we are, back on Wall Street Beats. Welcome to post-election edition. Obviously, we have a ton to talk about today, and I'm really pumped about it. A lot of different perspectives and some stuff that is moving in both directions. We're going to get into it. So in our panel, we have Benjamin Brey, Jeff Macke, Kevin Baker, and Robert Marcin. I'm your host, Paul Meeks, today on November 6, 2024. So let's start the panel today with Robert. What say you, sir?
Well, thanks, Paul. It's peak earnings release season for the second and third tier stocks. Not the blue chips. I call them the potato chips. So the potatoes are out of the bag these days. 3 updates on 3 companies that I'm long. I've mentioned multiple times in the past on the show. One company didn't do so well, but I'm buying that. It's the only stock I'm buying today. The other 2 had aha quarters in a way. So they're actually starting to rock a little bit. The first one is Chart Industries. We did a stock piece on that. At 150, did a buy piece at 109.75, and it opened today at 160. So they had a good quarter. The numbers were good. The change in administration is good for them because they have a large exposure to natural gas equipment, and now the Trump obviously administration will remove the natural gas restrictions for shipping LNG abroad. So these guys are, still not expensive relative to the peer group. I think in my buy piece, I said it would be triple the EBITDA multiple if it served any industry but LNG and natural gas. So while it's up about 40 or 50% from the bottom, it's still very reasonably priced because it was very cheap compared to the peers when it had that poop to bed quarter that drove it from 170 down to 103, I think it bottomed at. So things look good with Chart Industries right now. So another company that I like that's energy related is Select Water. Select Water does full cycle water management in all the major basins. And I don't know that the world is aware we have a water problem in the oil. It's not a drought. We have a drought here on the East Coast. We haven't had rain in 3 months probably, but there's too much water coming out of the oil wells, particularly fracking wells in this country. For every barrel of oil we produce 5 to 6 barrels of water that's unusable in most instances. So it's got to be treated, it's got to be disposed of, and there's been a conscious effort to improve the environmental impact, to both reduce freshwater consumption in fracking wells, because these wells are water hogs, and in reusing to save fresh water, the polluted recycled water that comes out of the oil wells after they start producing oil and natural gas. So these guys have a competitor. It's called Aris. When I analyzed this theme about a year ago, I fell in love with the full cycle water management business. Aris was 11. It's 22 today. It's done much better than Select Water, which was 8, and it's only 12 today. So we have a lot of catch upside. But Aris had their aha quarter, and Select Water only showed that they have it on the way. They did not put up. They put up a strong beat for the third quarter, and they put up a beat for the first quarter of 2025. But they said there were some issues with the fourth quarter, and that's why they talked about the first quarter of 2025. So it's good news, but it's a little bit camouflaged. So you have to look through the numbers. The stock market is looking through a sloppy fourth quarter guide, but that is a very cheap stock. And when they have their aha quarter, I think the stock will reach 18 to 20 in a year or so. So they're the two good news numbers. Silicon Motion is a semiconductor company that I've talked about in the past. They had pre-announced positive numbers. So hey, they got positive numbers. That was good. But when they finally came out with the actual announcement, the outlook was about 5% light on sales. So everybody cut the numbers, and the stock, which peaked at 85 this year, has drifted and down towards the low 50s. So I have bought it 3 times in the low 50s. I'm in it about 53 and change. And here's what's good about this. It's the semiconductor stock with everything. It has everything you want in stock. Unfortunately, it's based in Taiwan. And if China, goes hot into Taiwan, I got a problem with Silicon Motion. But this world has a much bigger problem with Apple and NVIDIA if that happens. Okay.
And Taiwan Semi.
And Taiwan Semi. So if Chinese take Taiwan Semi, the whole world is bleeped. But if the word
That's
begins,
right. That's right.
begins with an F. So let's say, so this stock is in the low 50s, is trading for 12 times earnings. It's only 1.6 times sales, which is dirt cheap. There's $8 a share in cash, and there's a $2 dividend. So you're getting close to a 4% yield. And the whole story here, they have a core business that makes controllers for NAND, flash, and SSDs. It controls how the memory and storage works in systems. And they've been around for a couple decades as serving the consumer electronics market. And quite frankly, that's a brutal market. They do okay, but it's not a great market. They recently introduced their data center and enterprise grade controller for the 3rd time, by the way. So it's not an easy market to break into. There is a moat, and supposedly it's an excellent product. And the feedback, they have 2 customers. They said that it's going to be 10% of the revenue in a couple of years from 2 customers, but they expect 2 more customers by the end of the year. So that could be 20% of the revenue. Suddenly you have a company that expanded its addressable market 4 times because the pricing on these products are so high. The TAM for enterprise controllers is 4 times that of their base business, the consumer electronics controllers. So these guys could turn from a 10% grower to a 15 or 20% grower if they make some serious inroads in the enterprise product market.
Hey, Robert, would you buy it now, or would you wait for it to wash out?
I buy shitty charts. That's, with good fundamentals. But
That's why we got you and Bakes on together.
But when I bought Select Water, it had a crappy chart. And when I bought Chart Industries, it had a disastrous chart, right? So the company's still growing. There's busted charts and there's busted businesses, and you don't want to buy busted businesses because they're turnarounds. I don't do turnarounds; they suck. Okay, but I do buy good businesses. I do buy good businesses that had growth misses and are still growing. That's different. And this company is still supposed to grow 10% in 2025 and maybe 15 to 20% in 26 with all the design wins they have now, especially in the enterprise market, which seems to be rocking and rolling for them. So I would buy a partial position. I would not. You don't know when it's going to bottom, Paul. We don't know when they're in the deteriorating phase. So you got to buy a little and then buy a little more. I bought it 3 times already, and I'm up to a small normal position for me, but it's becoming meaningful.
Yeah. All right, Robert. Well, we'll keep an eye on SIMO. Bakes, let's get into our election edition, and why don't you lead us with some technical analysis?
I appreciate that. I'm putting up the chart of McKesson. But before I go into this, I just want to, and I think you all know this, but maybe our viewers don't. I mean, I'm really discounting this action in the first half hour and an hour. There's a lot of emotion. There's a lot of people caught off sides. There's a lot of people short that don't want to be. And I'm really more interested in the close than I am in this open. And we'll learn a lot over the next few hours, in my opinion. So yes, some of these things are wonderful, especially if you're ringing the register. But I'm really watching the close. I mentioned before I didn't have the chart up. I talked about it maybe last week. Grayscale Bitcoin Trust Bitcoin. If it closes above 58.51, which I'm going to knock on wood, it looks like it wants to. That's why I'm waiting for the close. Bitcoin last night itself went up every time Trump won a state, and took out the prior high of 73,157 that I noted. So stay tuned to this channel for future updates on what's going on with Bitcoin. If it closes the way I think it's going to, I think we have a path to 100,000 and Grayscale Bitcoin Trust to 75. All right, here's McKesson. And yesterday, Sunday and Monday, I listened to, I can't tell you how many podcasts and the CNBC contributors, both on the right and the left. And because I do want to hear what both sides are saying. And the consensus almost unanimously was if Trump wins, he's going to explode the deficit via tariffs and tax cuts and all these things. And very few people gave credence to Musk and the Department of Government Efficiency, which is a little tongue-in-cheek, but the move to reduce agencies, reduce spending, and reduce regulations. Well, now we have a Republican president, Republican Senate, Republican House, and now it becomes a lot more viable. The market doesn't believe that reducing government spending is doable either. My good friend Ben Brey put together a screen for me with names like McKesson that have a huge percentage of their revenues coming from the federal government. And frankly, Booz Allen gets 95% of its revenue. It is a Matterhorn. It is just screaming to the upside. The defense contractors, they're all screaming. McKesson, I put up here because this is the one that's rolling over. And you have this close below the 200-day moving average that you see here that I'm circling. This rally up to here into feeble resistance on feeble volume, I think is going to fail. I'm not going to short it because I've got 10 other ideas that I like better. But I'm stay tuned again because I'm watching the Ben Brey list, making it the Bakes list and making it the Doge list. And as names start to falter as we go from election day to inauguration day, and we start to see K Street sweat a lot, then, and it may not happen, but I think the betting money is look for this surprise to ensue over the next couple of months, and hopefully make some money, or at least save some money by avoiding the names that get a lot of money from the federal government.
Hey, Bakes, do we actually have the firm result on the sway of the U.S. House of Representatives yet?
I don't know the exact numbers, but I could have sworn I saw that they had a majority, both in the Senate and the House. If I'm mistaken, I apologize, but that's what I saw in the wee hours of the morning.
Yeah, my feeling is, unless something happened more recently, is that yes, the Senate goes to Republicans, the House still undecided.
Yeah, I don't think the House is decided yet. I think it's still blue-ish.
Okay.
And just a point on that. That is the absolute worst case for risk assets, is the blue House with the Trump, because they're not going to get the tax cuts that people want if it's like that. And then, by the way, we have the debt ceiling coming up, and that will start to dominate conversations once the euphoria of the election runs off. And I don't think the Dems are going to be in any hurry to help the new government. And so I think that you're going to see the tariffs be dollar negative or dollar positive as the DXY is going vertical right now, and the bond market's selling off super hard. And then people start listening or thinking about what Bakes is talking about. It'll all kind of like come together.
Bakes, are you ready to yield the floor? I didn't want to cut you off.
No, I just want to talk about one more thing. And to new people that have joined us, I'm the chart guy, the chartist, and what I do is I go through 4,200 ETFs, virtually every ETF out there every month, and look for new ideas, looking for changes in trend. And I like to have the knife safely on the floor. And in this case, it's lithium and battery technology. There's a bunch of ETFs that look similar to this. This is Amplify Lithium and Battery, BATT. Full disclosure, I have not pulled the trigger on this, but it's doing all the things that I want it to do. The 200-day is just turning up here. You can see it's about a buck or two off its lows. The volume is picking up a little on the up days. We're above the moving averages, so we're out of the nightclub at 3:00 in the morning. And this looks like a base to me. And so if this continues, the high is 20 plus bucks, so a double from here. I'm going to go to spot right now. This is the lithium price. And this also points to the folly of having a political view, getting a president and saying, I'm going to make money on that. You know, he was the Green New Deal president and EV mandates and what have you. Well, lithium went from 72,000 a metric ton, to 600,000 down back to here. And now I think the knife is on the floor. I'm looking at lithium and battery technologies, and I'll report back when I buy things. But if anybody has ideas, complaints, concerns, or pushback, I'm all ears.
Love the perspective. Thank you, buddy. Hey, Jeff, let's move on to you. You know, sticking with our election theme. I read your note this morning. I was very intrigued about, the legislation angle that you've highlighted. But what do you got?
I'm a two-issue guy, Paul. I don't want the government killing my pet squirrel, and I want safety in my malls. And, so we had kind of both won last night. For all the stuff that we talked about with the presidents, people are running the playbook on the retailers. So they're killing the tariff companies. Best Buy's getting slobber knocked. Home Depot's getting destroyed. But there was Prop 36 in California. That was where I voted for the issue on theft. That was what allowed the criminal offense. So it made it a non-felony to steal anything at under $950. Didn't matter how many repeat offenses you've had. You can argue whether or not this was cause and effect, but 70% of Californians have voted for Prop 36, which now makes it a felony if you have repeat offenses. That's a huge deal for the shoplifters because shrink is one of those wonkish things that nobody really likes to talk about. It's hard to blame. It becomes super hotly political, but the numbers of it are Target, to take one example. They say 1.2% of their bottom line, their operating margin has been reduced by the increase in shrink since 2019. Now, that's not basis points. That's nothing, but our operating margin would have been 6 point something, and now it's 5. It's much lower. It's $1 billion for a company that makes $4 or $5 billion a year. That's a huge deal. A lot of these retailers would happily trade their tariff expense just to get some enforcement of the law so they can unlock stuff like your toothpaste. When you walk into a store, people argue about whether or not shrink is an accounting issue. I tell you what, the stores don't want to put everything behind lock and key. They don't want to have their underwear something that you have to hail a clerk to get and it takes you 5 minutes. That's just crap retail. And so what you're seeing, it's if we can reduce that shrink, if we've turned the corner on it, and 70% in California voting to repeal for Prop 36, which repeals 47, which is how all this got started in the first place, cracking down on crime in the stores. You're seeing a lot of names that benefit from kind of a more peaceful environment in the stores. A lot of companies that are going into the online business. That's been a tailwind for Amazon. One of the things they were talking about in pharmacies as they expand into that was how grim it is to go to a pharmacy right now. You see CVS up 10% on just a garbage quarter today. That's not a coincidence. Dave & Buster's is taking off. So you have domestic plays that benefit not just from things like the labor costs, perhaps having caps, not just from not having a tariff, but also from just a safer, more normalized kind of mall-going experience, which is going to be a huge boon for the physical retailers out there. Again, if you're going to trade it off, Target would happily pay the tariffs if you can make their store safe again, because it costs them a lot of money to have that stuff behind glass, man. A lot of money.
Yeah,
and they don't want to be running their store.
I was stunned by the shrink numbers.
Their shrink numbers are huge. And I tell you what, this is enforced on a state level. But California is they're the big dog. They wag the rest of the country on this one. And what they passed in this form of 47, that was copied by a lot of the other states, and that really opened the door. Now, you can't blame all the shrink loss on just the theft. But when you decriminalize it to make it a misdemeanor akin to jaywalking, and you don't even really bother to arrest people, you have this huge problem that's of an unknown quantity, and that's part of the issue. You crack down on that, that becomes a tailwind. If you just reverse it, the numbers work really well. It costs retailers a lot to buy something and then have that something disappear. Whether it's a counting issue, whether someone steals it off the truck, I don't care. It could be porch pirates. It doesn't matter where it disappears. If the store has to eat it, that's 100% profit loss. It just boom. And so this is a really high leverage way. Tariffs are a little fuzzy, but man, shrink is not. You want to improve your margin, you improve your shrink. And so if they can get a tailwind, if they can get the government back on their side for a lot of these mainstream retailers, a lot of the big box guys, that's a huge deal. I don't know if it saves Best Buy's quarter, but if you could turn that around into a tailwind, it's been something Target's dealing with every single quarter for the last 2 years. It's not a coincidence that stock has been getting pummeled in the meantime.
Well, Jeff, I am in charge of a couple of cadets at the Citadel. I can pack them with weapons and send them out west. How's that sound?
Just make it a crime. Make it consequences. We don't need our brightest and our best going, fighting it out in the stores. We just need to make it a crime to steal crap. That worked really well for a long time, that you can't just storm a store and it doesn't matter how many times you do it and it's always just a misdemeanor. This is really just kind of common sense type of stuff. You know what? It's not okay to steal. And the stores themselves haven't even been reporting theft. It's wildly underreported because there's no point to it anymore. You report on stuff that people call in, and the cops don't want to hear from a Target store if someone steals a set of headphones. And again, it's the tax that you pay. It's not something that you see. It's every time you go into a store, it's a pain in the ass to shop there. And sure, man, you got to get those plexiglass walls out of the way of customers. So that's something that happened under the radar. It's 70%. This was not a 50-50 thing. Half the country's pissed about a presidential choice. I get it. The people of California are cracking down on crime. That means something because this is a hippie, fruit stick and nut type of state. And if we're coming down on it, the rest of the country is going to feel it pretty quick.
Inevitable. Hey, Ben, we're going to clean up with you today. Yesterday, you refereed the brouhaha that we had live on our show. And obviously, you're going to talk today about some post-election action. So what do you got?
Well, just to speak to that brouhaha, HIMS is up 20% today. So I think David Maris is somewhere there having a big smile. And Russell's
eat drugs for all, just a fire hose of Viagra.
Okay. So I'm going to clean a bunch of stuff up that I've been talking about for a while. I think anyone who's a subscriber is listen. I've been pretty much adamant to buy Fannie Mae since $4. I've been selling it this morning. It was at $9 in the pre-market. It's kind of come in some. Remember, this is a slog, so there's a lot of people who are going to offer some supply because it's still an OTC security. And I've been selling my Geo as well here. I've been just layering it out from 20, and I have orders all the way up to like 23. And look, it can go higher. But from what my intents and purposes was, I recommended Geo at $12 on the show in August when the Kamala surge happened. It's $21, 20 and change right now, and Fannie Mae's $8+. And so, I'm ringing the register for the purposes of Wall Street Beats. And I also had recommended Boeing last week, and I played that deal. I'm out of there. I sold in the pre-market. Boeing, to Bake's point, is a perfect example of a company that is, a largest of government fat, in a competitor of Elon Musk, and now that Musk is the de facto president, I don't think that's a good thing for Boeing. And that there are $57 billion of debt and minimal cash flow. So I had a nice little run, made a couple bucks in Boeing, but for subscribers, that call is officially off. And then let's just talk about the Fed now, because in September, the day before the Fed meeting, I had come on here and said, sell stocks, sell bonds. And the stocks, have been flattish or whatever. They kind of just chopped around. But the bonds, on the other hand, have absolutely gotten destroyed. The 10-year was at 365 that day, and now we're at a 445 10-year. And awkwardly, Jay Powell's going to try and come and cut rates tomorrow with stocks at all-time highs. The lure of tariffs, which could be inflationary, at least initially, and basically the bond market just getting napalmed. It's going to be real awkward for him. Let's see if he has the balls to sit here and not cut, because that's what he should do. They have no business cutting right here, and we'll see. I think after the unpositioning of what is today, people are going to start having all eyes on the Fed that comes on Thursday, not Wednesday as normal, just because of the election.
Right. Now we'll know 2:00 tomorrow afternoon, right?
Yeah, correct. And I think 100% was priced in for a cut, but again, they're starting to take it out of the December cut. Was at 90%. Now it's down to about 50, 60. And I just think when you look at this bond market, it's like the people are going to be nervous that the Fed's going to lose the long end if they try to be too aggressive in the cutting. Now they could try and beat it up, but I don't know. The banks have real issues with, and Charlie's talked about a lot. They have about $500-600 billion of unrealized losses, which isn't an issue as long as deposits don't flight. But that's there, and with all the mortgage as well. There's huge demand to hedge duration, and that's why you see these interest rates move around like they do. But if we get to 5%, I'm telling you, stocks are not going to like it up there. It's going to get real uncomfortable real quick. Yeah,
I remember back in October of 23, we got that 5% 10-year. That was a little tech wreck.
And by the way, the S&P was 4,200 then.
And Charlie had a great call yesterday. He said, I don't think he wanted to say out loud, but kind of intimated that Trump was going to win it. And he said that the credit card companies would do particularly well. Take a look at the credit card companies today. Nice trade.
Yeah.
All right, guys. Well, that's all we have time for. Hopefully you got something out of our post-election commentary on Meeks. He's Brey, Macke, Baker, and Marcin. We're going to see you tomorrow.